Imagine waking up one day to realize that two of America's most iconic brands, Apple and McDonald's, are starting to lose their dominance. Not in a small niche market, but in China, one of the largest and fastest-growing economies in the world. What was once considered a golden opportunity is now quickly becoming a massive challenge. This shift isn't just an isolated event. It's a sign of deeper changes in China's economy, and the ripple effects are bound to be felt across the globe. Why does this matter? China is rapidly rewriting the rules of success in the global marketplace, and its growing influence will reshape the global economy. The way China develops its domestic brands, adapts its consumer preferences, and forces new regulations is setting new standards that could alter the way businesses operate worldwide. For American companies like Apple and McDonald's, the stakes couldn't be higher. So how does this impact foreign companies? And most importantly, why should you care? In the last decade, China's market has undergone a transformation unlike any other. It's not just about growth anymore. China is reshaping its economy into an innovation powerhouse. Local Chinese companies, once considered mere imitators of Western brands, are now emerging as global leaders in technology, consumer goods, and services. Brands like Huawei, Xiaomi, and Luckin Coffee have gained remarkable popularity, often outperforming their Western competitors like Apple and McDonald's in terms of consumer loyalty and trust. A recent Bloomberg report reveals that local brands are not only gaining ground, but are seen as more attuned to Chinese consumer preferences than American ones. With China's rapid advancements in tech and shifting government policies, the domestic market is becoming a hotbed for innovation and competition. Huawei, for instance, has been at the forefront of cutting-edge technologies like 5G and AI. The company has grown from being a regional player to a global technology giant. As Dr. Jean-Paul Larson, an expert on Asian markets, points out, China's corporate landscape has moved beyond copying Western models. Now it's about setting trends and pushing boundaries. So, does this mean American brands are facing a permanent decline in China? Not necessarily, but the data suggests this shift is significant and long-lasting. For American brands operating in China, this is not just a temporary trend. The change in consumer preferences is not a small blip, it's a lasting and deep transformation. A 2023 survey by Global Times revealed that over 70% of Chinese consumers now prefer local brands over foreign ones. This marks a dramatic shift from just a decade ago, when Western brands had the upper hand in the Chinese market. This shift aligns closely with China's new economic strategy, the dual circulation model, which emphasizes self-sufficiency and encourages domestic consumption. Essentially, China still welcomes foreign brands, but it has placed much more focus on supporting and promoting its own homegrown companies. According to economist Wang Wei, China's push for domestic consumption is not just an aspiration anymore. It's a clear policy with teeth behind it. So what's driving this change in consumer preferences? Let's explore some of the key factors behind the shift towards local brands. For years, Apple was synonymous with aspiration, luxury, and cutting-edge technology. However, rising prices have caused some consumers to rethink their purchasing decisions. In contrast, local Chinese brands like Xiaomi and Oppo offer similar products at a fraction of the price. A study by McKinsey & Company found that 62% of Chinese consumers now prioritize value-for-money brands over premium labels. With inflation rising and cost of living pressures increasing in cities like Beijing and Shanghai, Chinese consumers are becoming increasingly price-conscious. As local brands can match or even exceed the quality of foreign products, they're offering an affordable alternative. Beyond just price, Chinese consumers have also grown more confident in the quality of local products. Younger generations, in particular, view Chinese brands as equally, if not more, reliable than their Western counterparts. A survey by Statista showed that 55% of respondents under 35 trust Chinese brands just as much, or even more, than foreign ones. The growing quality perception of local brands has leveled the playing field. Brands like Huawei and Xiaomi have capitalized on this by offering products with comparable specifications to Western counterparts while maintaining lower prices. This has created a strong competitive advantage for Chinese companies. In addition to economic factors, rising nationalism in China has played a crucial role in this shift. Huawei, for example, became a symbol of national pride when it faced sanctions from the US. Many Chinese consumers rallied behind Huawei, viewing the brand as a symbol of resistance and defiance against foreign pressures. According to South China Morning Post, Huawei's market share in China surged by 30% after the sanctions, illustrating how nationalism and consumer behavior can drive market trends. Nationalism has become a significant driver of consumer decisions in China. A recent survey by South China Morning Post found that nearly 80% of young Chinese consumers prefer to buy from local brands as a way of supporting China's economy and values. It's no longer just about price or quality. Buying local is increasingly seen as an act of national solidarity. The rising cost of living in major Chinese cities has made affordability a major concern for consumers. The China Daily reported that the cost of goods and housing has risen nearly 15% since 2022, putting added pressure on household budgets. Foreign brands like McDonald's and Starbucks, once seen as trendy and accessible, are now perceived as luxury options due to their premium prices. Local alternatives, on the other hand, offer comparable quality at lower prices. For instance, Luckin Coffee has aggressively undercut Starbucks with affordable pricing while maintaining quality. The company saw a 30% increase in market share last year by appealing to cost-conscious consumers. As economist Jing Zhong points out, Chinese consumers are becoming more pragmatic and are willing to choose brands that fit their budgets. Beyond consumer behavior, foreign brands also face a growing list of regulatory hurdles in China. New data localization laws, for example, require companies like Apple and Tesla to store user data within China's borders, significantly complicating data compliance and security measures. Apple, for instance, had to reconfigure its entire Chinese data infrastructure, a process that Bloomberg estimates added millions of dollars in costs. These regulatory changes, which were initially seen as administrative, are increasingly becoming a structural barrier for foreign companies. As compliance costs soar, some American companies are questioning the long-term viability of operating in China, especially when compared to local competitors who are not burdened by these same requirements. In China, sustainability is not just a trend, it's become a central issue for both consumers and the government. Environmental concerns are particularly important to younger generations, who see climate change as one of the most pressing challenges of their time. A Greenpeace China study found that 72% of consumers under 30 actively seek brands that prioritize sustainability. American brands looking to succeed in China must go beyond offering eco-friendly products. They must also demonstrate a genuine commitment to green practices. Starbucks, for instance, has pledged to operate entirely on renewable energy across all its Chinese outlets by 2030, a move that has strengthened its appeal to environmentally conscious consumers. Building emotional connections with Chinese consumers is essential for brands to thrive. In China, successful brands understand that it's not just about selling a product. It's about connecting with consumers on a deeper level, respecting local culture, and demonstrating an understanding of what matters to them. Apple's campaigns celebrating Chinese New Year traditions and showcasing heartfelt storytelling are a perfect example of this approach. For McDonald's, adaptation is key. The brand has been in China since the early 1990s and has learned the importance of cultural adaptation. McDonald's menu in China includes local dishes like rice-based meals and spicy options, with nearly 60% of its menu tailored specifically to Chinese tastes. Moreover, McDonald's has embraced China's tech-driven consumer culture, incorporating AI-powered kiosks and facial recognition payment systems into its restaurants. As China's market continues to evolve, American brands must adapt in every dimension, culturally, technologically, and logistically. The future of these companies in China will depend on how well they integrate with local trends, consumer preferences, and government policies. Those who succeed will have a clear understanding of the region's unique needs and the flexibility to adjust their strategies accordingly. In China, the rise of domestic brands and the country's changing economic and cultural landscape signal a broader shift in global consumer behavior. The future of foreign companies in China is not guaranteed, but those who understand and respect the complexities of the market will have a better chance of thriving. The way China's market evolves will have wide-reaching implications for businesses worldwide. As the world's second-largest economy continues to grow and reshape the global marketplace, we are witnessing the start of a new era of global commerce. For American companies, the challenge is clear: adapt or risk being left behind. Please like, subscribe, and check out another video now on your screen.